Oh, hello. Can you guys hear me now? Hi, Bob. Can you guys hear? I was saying hi to everyone, and I forgot to turn on my mic. Uh, can you guys hear me now? Okay, hi, Ellen. Hi, Luca. Hi, BL. Hi, Bob again. Hi, hi, Fabio. Hi, Jamilu. Okay, I still see a lot of you joining, so I'm gonna give like everyone a minute or two. Hi, Jody. Hi, Adebola. Let's just give everyone a minute. This attendance list is still moving, still moving. Hi, Kelvin. Hi, Hassan. Okay, so since a lot of you are still joining, I just, while we're giving the rest a bit of time, I just want to check with you guys, how familiar are you with Elliot wave to begin with? Because our topic for today is Elliot wave. Well, it's more like a combination of Elliot wave and Fibonacci, which are two quite, hi Desiree, two quite heavy topics. Okay, so can you guys let me know how familiar you guys are with Elliot wave so that I know if I should be explaining like a lot or not? Quite familiar. Okay, so I've got, okay, I think so. Bob, Fabio kind of knows it already, can go more in depth, quite familiar as well. Okay, cool. Okay, I guess most of you are quite familiar as well. Not familiar at all, a fair bit. Okay, I think both Elliot wave and Fibonacci, they are not hard topics, but the problem is it's very wide topic. So there's a lot of things to remember, or a lot of things to understand rather. Okay, I don't like to say remember in trading. Why? Because we have Google nowadays. Honestly, if you forget anything, you can just Google the answers. If you forget like, oh, what levels are Fibonacci retracement, you can just Google the answers, right? So the same as Elliot wave. Slightly familiar with Elliot, but very familiar. Okay, so most of you who answered are quite familiar. There's only one or two of you who said not that familiar. It's okay. I will, for the sake of those who are only hearing Elliot wave for the first time or are a bit new to this, I will go a bit slower. But for the rest of you, it'll be easier for you to follow because you already know what this is about. So our topic for today is Elliot wave, prep course, know your Fibonacci. Okay, we're gonna spend 1 hour on this. I don't know if I told you guys before that sometimes I use Elliot wave and it's crazy accurate. Of course, combined with Fibonacci. Without Fibonacci, Elliot wave is not impossible. It's so crazy accurate. Like the entries are like on the dot, like on the point. A lot of times it's like on the dot and on the point. So I think it is a good technical analysis, but it also requires a lot of like back testing. It requires a lot of like visualization because you kind of need to know in your mind how the waves will work out. Okay, so let's start. Okay, disclaimer. You guys know how this works already. This is not a signals or forecasting group. Please be cautious when you are trading. This webinar is purely for educational purposes only. Please do not construe this as trading advice or construe this as educational. Please take this as educational. Do not construe this as financial advice or trading advice. Okay? Cool? Okay, cool. Okay, our agenda is to find out why is Fibonacci important for Elliott wave. Look at the key Fibonacci levels, Fibonacci retracement, and Fibonacci projection. For those who already, hey Zach, welcome. For those who already know Fibonacci, right? Part 3 and part 4 of the webinar for you is going to be quite boring. Because it's gonna be more like a recap for you rather than like anything new. Okay, part 1 and part 2. Actually part 1 especially, I'm gonna touch a bit more in depth on Elliot wave. Elliot wave is a super wide topic. Okay, there's so many rules to remember, but these rules, if you follow them, will make you a lot of profit. Okay, so other than number 1, 3, and 4 is focused more on Fibonacci. Number 2 as well. So introducing your host, you guys already know who I am. Well, majority of you already know who I am. I see so many of you here all the time: Bob, Desiree, Fabio, Hassan, Jamilo, Jack, Jody, Kelvin, Kevin, Lucas. So many of you, like, you guys already know. Oh, hey, that Choi. Oh, that Choi as well, who's also joining my Bahasa webinars. But for the rest of you, if you don't already know me, right, my name is Cassandra. I used to have a really long description. I deleted everything because I think since we're here for trading, the only important thing you need to know about me is that I am a prop trader and an external analyst at Everest Fortune Group, which is a nice to meet you too. Yeah, there's 2 Hassans here, so I think I met. There's one Hassan that's always here and one Hassan that's here for the first time. Okay, so you just need to know I'm a prop trader. I've passed FTM on my first one multiple times. For those who don't know what these are prop trading tests that requires you to do 8 to 10%. It sounds really easy. It's not that easy. Only 4% of people pass, or actually 1.4% of people pass, and only less than 2% or 1.5% of people ever get a payout from this prop trading test. I am in that 1.5% people. Okay, I specialize in technical analysis. So if you have any questions regarding technical analysis, please let me know. Okay, just ask in the chat box. Don't worry. I think there's quite a bit of you today. Like most of the times our webinars can go up to like hundreds of people, but today's it's only like less than 50 of you. So if you have a question, I guess today will be a good time to ask, because then you wouldn't be like stopping the webinar for too many people either. You need to ask these questions, right? Don't be shy, because if you don't ask someone who specializes in technical analysis, then you wouldn't know where to get answered unless you just Google the answer. And like, yeah, sometimes Google don't really give you the correct answers anyways. I mean, the direct answers. Okay, so why is Fibonacci important for Elliot wave? Let's go through, okay, let's go through what Fibonacci is, the history of Fibonacci. So Fibonacci was discovered by Leonardo Fibonacci da Pisa. It's a 13th century mathematician who discovered Fibonacci sequences. In 1242, he published a paper entitled like Liber Abaci, I'm probably pronouncing it wrong, it's in a different language, which introduced the decimal system. The basis of the work came from 2-year study of the pyramids at Giza. Okay, so this is just a history. It's nothing important to remember. Okay, Fibonacci is most famous for its Fibonacci's summation series, which enabled the old world in the 13th century switch from Roman numberings, okay, to the Arabic numberings that we use today. So his work in mathematics, Fibonacci was awarded the equivalent of today's Nobel Prize. Basically, what I'm trying to say is that this Fibonacci person who discovered this Fibonacci sequence made a very important impact to our lives today. Like we used to use, you know, like XXI, now we use like numeric numbers, okay, Arabic numeric numbers. And on top of that, in trading itself, honestly, I do not see how you can trade without Fibonacci. Like, yes, you can use support resistance, you can use like trend lines or channels, whatever, but Fibonacci confluence, I think, is always still so necessary. It makes your trade just like that much more accurate. So I think, and it's not like just like one technical analysis, it's all technical analysis that you combine with Fibonacci is super duper duper important. So if you haven't already mastered Fibonacci, please go and master Fibonacci. It's not a very hard topic. It's just like, it can be confusing at first, but after that, then you're like, oh, okay, this is really easy. Okay, so please go master Fibonacci if you haven't already. Okay, so let's talk about the different kinds of Fibonacci's available. Okay, what's going on? Okay, we've got the retracement, projection, expansion, and extension. All four we're kind of gonna be looking at in Elliot wave. You will be using all four in Elliot wave, more so with retracements. Retracement, anything that you combine with, even if you're using like let me see, gun trading, or there's this topic that I just taught, all the other patterns, or I can't remember the topic, sorry, technical analysis, you are going to use Fibonacci retracement. Fibonacci retracement is the most basic kind of Fibonacci. Okay, so Fibonacci is useful to measure the targets of waves move within the Elliot wave structure. Different waves in the Elliot wave structure relates to another with Fibonacci ratio. For example, the impulse wave of wave 2 is typically 50% or 61.8%. Wave 3 is typically 161%, 61.8% of wave 1, and wave 4 is typically 23.6 or 38.2 of wave 3. Okay, so these are some of the rules to kind of let you guys understand. Oh, don't worry. You just taught Elliot with, oh, yes, I think to the Bahasa crowd. Yeah, to the Bahasa crowd, I just taught Elliot. No, this morning I just taught, give me a sec. I'm trying to see the topic. That is a very good technical analysis as well. Oh, harmonics patterns. Yes. I just taught harmonics patterns this morning, and it is also Fibonacci. You need to implement Fibonacci into harmonics patterns as well. Okay, so my point is Fibonacci is super duper important. Yes, pregnancy brain. Sorry, that's why I'm forgetting. Like, my brain isn't connecting the dots these days. Okay, so anyways, this is super important. We will be going through that. So key levels, key Fibonacci levels. Okay, before we even talk about the key Fibonacci levels, for those who don't understand Elliot wave, this is the basically the gist of it, or like the important part of Elliot wave. So Elliot wave basically means that when you go, so this guy, Mr. Elliot, I can't remember his full name, but Mr. Elliot, when he went to the chart, there was one thing that he noticed. He noticed that price is constantly moving in wave patterns. Okay, it's moving in wave patterns. And another thing that he noticed is that it's constantly moving in 5 wave patterns. So let's say price is on an uptrend or a downtrend, you will see price moving in a 5 wave pattern. When it reaches the peak, and it will do its like 3 wave pattern or another 5 wave pattern. Okay, so that's the retracement part or the corrective part of it, which we won't really go in depth today, because today it's a combination of both Fibonacci and Elliot wave. But basically, Mr. Elliot just noticed that there was 5 wave, and he noticed when this 5 wave happens, wave 2 and wave 4, which is the corrective wave, is always shorter. So that means, let's say we're in a trending market, an uptrend market. Price is going up, it will pull back a little, that's your wave 2, go up again, pull back a little for your wave 4, and then continue with wave 5. Okay, so for those who don't know Elliot wave, there's gonna be a lot of rules, a lot of guides for Elliot wave, but these rules are the most important. This one. Okay, so rule number 1, anytime you go to the chart and you see 5 waves, you're like, oh, I spotted the Elliot wave. If that 5 waves that you spotted do not satisfy these 3 rules, you have spotted a wrong wave and you are going to get a wrong analysis. Okay, it has to, sorry, it has to satisfy these three rules. So the rule number one is that wave 2 cannot retrace more than wave 1. So wave 2 has to be shorter than wave 1. If it goes longer than wave 1, you have spotted a wrong. It's not the correct Elliott wave. Okay, wave 2, rule number 2, wave 3 can never be the shortest of the three impulse waves. So from these 5 waves, 1, 3, and 5 are impulse waves. 2 and 3 are called corrective wave. Corrective wave means it pulls back or it retraces. Okay, so wave 3 can never be the shortest. It can be the middle longest. It's usually the longest. Most of the time it's the longest, because out of these 3 waves, there's going to be one that is super long. Okay, usually that is wave 3, but it just cannot be the shortest. From these 3 waves, it has to be just not the shortest. Okay, so rule number 3, wave 4 can never overlap wave 1. When I mean overlap, I mean that when wave 4 pulls back to this area, I'm drawing on the picture. I hope you guys can see it. Okay, when wave 4 pulls back, it does a pullback. It cannot come near this wave 1 area, this high of wave 1 area. If it comes near or it goes over, it means you have spotted the wrong wave. So using these rules, you can kind of identify if you have spotted the correct Elliott wave. Because if you have spotted correct Elliott wave, I can promise you are going to make a lot of profit. But if you don't spot the correct wave, then you're just, yeah, it's just a wrong analysis. Okay, and the good thing about Elliott wave is that once you spot it correct once, you just need to spot it correct once, okay, one time. You can continue to spot it correct repeatedly. You can continue. I remember like there was this one time I was trading gold and I had like 9 correct trades in a row. Okay, so out of 10 trades, I got 9 correct trades in a row, and I was using Elliott wave to use it. It was crazy. My entries was like all on the dot, on the dot, on the dot, on the dot. Like if I said my entry was $15, at $15, true enough, it's gonna reverse. But I use Elliott wave and I use Fibonacci. Why I not that I stopped using Elliott wave. I think it's very time consuming. It's like it requires so much brain power and so much back testing, because once you find your 5 waves, you then need to go and tally with the rules. And then let's say rule 1 is correct, rule 2, what does the percentage beside each wave mean? Oh, okay, yeah. This is not too important. I just plucked this picture off of Google, so don't refer to this too much. Don't look at this too much. Good question, Desiree. Actually, I didn't even notice this there. Okay, I'm gonna like kind of like scribble on it so you guys don't see it. But yes, more importantly is the Fibonacci levels that we will get to in a while. Okay, so the thing about Elliott wave is that like you think you spot the correct wave, you're like, oh, rule 1 is satisfied, rule 2 is satisfied, then you reach rule 3 and it's not satisfied. You're like, oh my god, I need to look for another 5 waves again. That's why I don't use Elliott wave if you have a lot of time. It's very accurate, but this is for people who have a lot of time. Okay, it's really for people who wants to sit in front of the computer and just chart and backtest all day. Elliott wave is perfect for making money, also perfect to pass time. So that's why I use it when I can. But these days I just use the basic technical analysis, because technical analysis, the basic one that we, when we do live trading analysis and we go through so many charts, it takes me like 5-10 minutes to come up with an analysis. I mean, the 5-10 minutes, a lot of times, maybe my win rate is not as high as Elliott wave, but for me, winning 6 out of 10 trades is good enough because my risk to reward is good, right? Or winning just a fair amount of number is good enough. But I can promise you with Elliott wave, your win rate is going to be like crazy. It's going to be like 9 out of 10, 8 out of 10, maybe 10 out of 10, 10 out of 10 sometimes. Okay, so that's Elliott wave. Oh, how do I erase everything? Okay, erase all ink on slide. Okay, there you go. Okay, so that's basically Elliott wave. We already went through this. Wave 1, 2, 1, 3, and 5 is your impulse wave. 2 and 3 2 and 4 is your corrective wave. And why it says it's lettered, because people like that Troy, he would already know because you attended my Bahasa Elliot wave webinar. Because let me find an empty space I can draw on. Okay, so price is moving in 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5. Within the waves, there are sub waves. Okay, so this is a daily time frame. If you go down to the H4, okay, let's say you plot this on the daily time frame, you go down to H4. Within wave 1, you will see 1, 2, 3, 4, 5. That's why I say Elliot wave is for people who have a lot of time on their plate. And then wave 2 has A, B, C. Wave 3 has 1, 2, 3, 4, 5. Wave 4 has A, B, C. Wave 5 has 1, 2, 3, 4, 5. Okay, so wave 1, 3, and 5 constantly and forever has 5 waves within it. So the sub waves will have 5 sub waves. Okay, so wave 1, 3, and 5 will always have 5 sub waves. But wave 2 and 4, which are the corrective wave, okay, they don't necessarily come in A, B, C. Sometimes they come in like WXY or WXYZ. Okay, sometimes it comes in more than 3 waves. Okay, that's why when I am using Elliot wave to trade, I do not trade wave 2 and wave 4, because wave 2 and wave 4 has too many variations. But I know in my mind, oh, okay, I'm in wave 1. In wave 1, I should look up for 5 sub waves. Okay, so it's like, it's so simple. Wave 2 and 4, there's so many versions. Because I don't trade wave 2 and wave 4, I didn't even bother to remember this information. But if I'm not mistaken, there's like 50 plus variations for wave 2 and 4. That means whenever there's a pullback, it can come in like a triangle, it can come in ABC, it can come in ABC, 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 it can come in like WXY, WXY, WXY. I didn't even bother to put corrective waves in our webinar today because I don't even encourage anyone to trade corrective waves. Okay, so corrective wave means that you're getting in here for a buy. People who trade corrective wave will get in here for a sell. But I only get in for a buy at 1, 3, and 4. Sorry, 5. So I'm always looking for a buy here, here, and here. But people who wants to trade every single wave, they will look for a buy here, take profit here, look for a sell here, take profit here, look for a buy here, take profit here, look for a sell here. Okay, I don't do that. I don't want to go against the wave anyways, because corrective waves are always going against trend. So if price is going in an uptrend, 2 and 4 will always be going against trend. So it will be going down, it will be doing the pullback. Okay, and because there's so many variations, right? Unless you're really so free, right, to go and like go through all 50 plus variations, okay, it's very hard for you to predict which variation is in play and where your wave 2 is going to stop. Okay, so rather just skip playing wave 2 and wave 4 and just play wave 1, 3, and 5. That's why I always say if price is in an uptrend, you go for a buy. If price is in a downtrend, you go for a sell, because technically, basically, you're playing wave 1, 3, and 5. If price is on an uptrend and you're going for a sell, in terms of Elliot wave, you're basically playing wave 2 and wave 4. Okay, and there's too many variations. It's just so much. Okay, just don't force it. Okay, so that's Elliot wave, basically. Okay, so this is where Fibonacci ratio comes in with Elliot wave. Okay, this is where Fibonacci comes in with Elliot wave. Okay, so these are rules for Elliot wave. These are the golden rules. For those who need to take a photo, please take a photo of this. If anything you take away from this webinar on Elliot wave today, please take away these 3 rules. If like nothing goes into your, like you don't absorb anything, please absorb that Elliot wave, you need to follow these 3 rules. Okay, this is they call this the golden rules in Elliot wave. Okay, I'm gonna give you guys a minute if you guys are taking down notes or like taking a picture or or something. These 3 rules here, rule 1, 2, and 3. Everything else I talk about in Elliot wave, they are also rules, but they're not golden rules, okay? They're like not the must, they're more like guidelines rather than rules, okay? So it's good to follow the guidelines, but it's not necessarily like, it doesn't like, it's not like this is solid, okay? There's no way you can run from these 3 rules. Okay, cool, everyone good, right? Okay, so the relationship with Fibonacci and Elliot wave. Okay, I'm gonna read the guidelines. Okay, the first guideline, wave 2 is usually 50% or 61.8% of wave 1. Okay, wave 2 is usually 50% or 61.8% of wave 1. Sometimes it can go to 78.6%, or sometimes it can go to as high as 88.6%. Okay, that means you spot a Elliot wave. Okay, you see wave 1. At the end of wave 1, it will do a retracement or a pullback, and when it pulls back, it will do not minimally, but usually 50%, 61, 78, or 88. Okay, most of the time it's 50 or 61.8. Okay, and then after that it will continue back up. Okay, but it can never cross the bottom of wave 1. Okay, it can never cross the bottom of wave 1. If it crosses the bottom of wave 1, it already invalidates our rules, our 3 rules, which is wave 2 cannot pass wave 1. Okay, if it passes, you didn't spot Elliot wave. I don't know what you spotted. Okay, so that's that. Wave 3 is usually 161.8 to 200% or 261.8%. In extreme cases, it is 323.6% of wave 1 to 2. Okay, so wave 1 to 2, okay, wherever it stops, okay, wave 3 is usually 1.618 to, in very, very, very extreme cases, 3.236 times of wave 1 to 2. Okay, so it's basically a Fibonacci extension of wave 1 to 2. Everything I'm going through right now is just the guideline. So if you forget, or if you didn't take a picture of this, don't worry. The rules of Elliot wave is just a Google search away. But I'm just gonna cover what these levels kind of mean, what the usual ones are. Okay, so that when you do, if Elliot wave is something you do want to go into, at least you won't be like completely lost when you venture into Elliot wave. Okay, cool. Okay, so wave 4 is 14%, 14.6, very, very rarely, okay, but 14.6%, 23.6%, or 38.2% of wave 3. Okay, but it is never, sorry, this is wrong. It usually is no more, okay, this is not wrong, it's more like it's usually, it's just usually the more common ones are 38.2 to 50%. Okay, 38.2 to 50%. Sometimes, actually, in my own trading, I find that 23.6% is quite a common level as well. So I'm just going to write 23.6 here. Okay, so I mean, of course, it depends on the pair you're looking at and the charts you're looking at. Okay, so I chart a lot on gold. and on gold and Ethereum as well. So on gold and Ethereum, I find that sometimes wave 4, it pulls back to 23.6 and it's like, okay, I've done my minimal, I'm going to continue back up. Okay, I'm going to continue with the uptrend. So it does like a very little pullback or a retracement, and then it's like, okay, I'm done. Okay, but it can go up to, very rare cases, it goes up to 61.8, but usually not more than this. Okay, usually not more than this. Actually, usually not more than 50%. Only in like some cases it goes up to 61.8%. So if you do spot wave 4 and it goes up to 61.8%, just remember that it is still possible that your wave count is valid. Okay. Okay, wave 5 is the most interesting one. Okay, wave 5 is the most interesting one. Sorry, I was circling the wrong one. This is wave 5. Okay, then this is ABC. Okay. It's the most interesting one. There's 3 ways to calculate wave 5. The first way is that wave 5 is the inverse 123.6 to 61.8 retracement of wave 4. Okay, so wave 4, let me see, where's my pen? Okay, so this is wave 5 and this is wave 4. Okay, so wave 5, the first way to calculate is that it's 1.236 to 1.618 times of wave 4. Okay, that's your first way to calculate wave 5. The second way, which I think is the more common way, when I was trading with Elliot Wave and I was using XAUUSD to trade, the more common one I found is that wave 5 equals to wave 1. Okay, wave 5 equals to wave 1. So the length of wave 1, let's say wave 1 move, this is $5 for example, and this is $10. Okay, so wave 1 moved $5. Usually wave 5, what my own experience I found, is the same length of wave 1. Okay, that's the second way to measure wave 5. Okay, and the third way to measure wave 5 is that it is 61.8% of wave 1 to 3. Okay, so you take this entire length here, this entire length here, and you times that by 0.618%. Okay, don't worry if you don't remember the numbers, you don't remember the all these percentages, just Google the rules. Usually find the peak of wave 5 would coincide with some reason and other same length of wave 1. Yes. Also, yes, I do. I do find that it coincides with resistance. That's why with any kind of technical analysis, right? It doesn't matter what kind of technical analysis you're using, right? Combine it with support and resistance and Fibonacci. For sure, right? It will just bring your trading to so much more accurate. Your hit rates will be so accurate. Okay, so you know how there's always a range, even for, why do I keep forgetting the name? Okay, even for harmonics pattern, right? Harmonic pattern, so it always gives you a range. So you know that wave 2 is going to retrace from 50% to 61.8%. 50% to 61.8%, right, for example, right, can be quite a number. So sometimes you want to get you want to maximize your take profit. It can't be every time you trade, you put your take profit at the minimal entry. That's why there's a lot of people with take profit 1, take profit 2, take profit 3, because if they're using things like Elliot Wave, let's see, wave 3 can go from 161.8% to, in very extreme cases, if I don't trade corrective waves, then can only trade wave 4, isn't it? No, wave 4 is a corrective wave. So you don't trade, I mean, obviously you can trade corrective wave. I don't trade corrective wave. I don't recommend trading corrective waves. Yes. If you don't trade corrective, then you can only trade wave 5. Nope. You can trade wave 1, 3, and 5. Okay, so how you trade wave 1, 3, and 5? Very good question, Tatchoy. Is that instead of, okay, so within wave 2, right, there's A, B, and C. Okay, so some traders are very ambitious, very free. They have a lot of free time in the world. They get in here for a sell, they take profit here, they want to get in here for a buy, they take profit here, they get in for a sell. So people who trade wave 1, 3, and 5 like myself, rather than trading in wave to end, and then here I get in for a buy. Okay, how do I do that? I use this rule. Okay, so once wave 1 has ended, it has pulled back. Once it's pulled back, right, I'm like, okay, I'm gonna take a break now. I'm not even gonna look at it anymore. The next time I look at it is when it reaches 50% or 61.8%. 50% or 61%, that is when I get ready to get in for the buy. Whatever it's doing while it's on the way to 50%, I just ignore it. I'm just like, oh, I'm taking a break. I'll come back to the charts once it reach this area. So I'm basically, every time wave 2 and wave 4 is happening, I'm basically waiting for wave 2 and wave 4 to end so that I can get in for the buy entry. I hope that answers your question. How do you trade wave 1? Okay, good question. So remember I said, what time frame do you use for this analysis? I start on the daily, then I go down to 4 hours, and then remember I said within every wave there are sub waves. How do you find okay, let me answer Jodie's questions first. These are very good questions that you are asking. It's very important. Okay, so I do daily, and then I go to 4 hours to confirm my wave count. Because remember what I said, within waves, there are sub waves. Okay, so let's say I'm on a daily chart. I identify 5 waves. Sorry, didn't put my phone on silent. Okay, I identify 5 waves. Okay, I go down to the 4 hours. Within the 5 waves that I drew on the trading view, you will see 5 waves, right? If you zoom out. Okay, within that 5 waves, I will draw another 5 waves in it in a smaller time frame. So the time frame that I use is daily and then 4 hours. My trades can last up to 2 days. The one that I got 9 trades correct, I actually did 4 hours and 1 hour, because that one was, I was day trading. I was trying to pass a FTMO test. You know how FTMO, they have like a time limit within 30 days, you need to pass 8. You need to pass with like 10% profit. So if I'm taking a test, I would never ever use like, I would never ever use like a daily or a 4 hours, because by the time it reach my take profit, it's 2 days later. Sometimes it's like 4 days later. It could be 1 week later. My trade is still trying to reach the take profit. So because I was day trading when I was taking that test, I do H4 and H1. Now that I am pregnant and I don't want to spend so much time on the computer, I want to spend most of my time sleeping, I do look at the daily and then the H4. So what time frame you look at depends on your lifestyle, to be honest. It depends on how frequent you can come back on the charts to like do your confirmations. Okay, how do you find the start of wave 1 and wave 3 because you need the confirmation? Good question. I was just about to say, okay, remember 1, 2, 3, 4, 5. After 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 is actually, let's say this is a daily time frame. You spot 1, 2, 3, 4, 5 on the daily time frame. But if you go to the weekly time frame, this is actually wave 1. You know what I mean? I don't know if you can like visualize what I'm saying. If this is wave 1, the start of ABC is wave 2. So if you go to the bigger time frame, it is 1 wave. If you go to the smaller time frame, it is sub waves. I don't know if like you can understand what I'm saying, or like visualize, because it's easier for me to show you if we are on trading view, but I'm not done with my slides, so I cannot go on trading view. Maybe we can quickly finish this slide so we can go on trading view. Can you use, I use it more like a computer. So someone's asking, Hassan is asking, can you use MACD together with the chart to identify the wave of 1, 2? I don't use other technical analysis to identify waves. Rather, I use technical analysis as a confluence to find analysis. So before the point X, what does the chart look like before point X? Is it consolidation, or is it downtrend, or change of direction, or break of market structure? Okay, this one, good question, Desiree. I would need to go trading view to show you. Okay, let's quickly finish the slides. Because I think most of you already know Fibonacci, I'm just gonna like breeze through Fibonacci, and then we're gonna go to the slides and I'll show you what Elliot wave. I want to focus more on Elliot wave because I think Elliot wave is like the winning technical analysis if you have time. Okay, Fibonacci, it's not that hard, to be honest, to learn. It's not that hard. Okay, okay, let's just, where were we? Okay, we've gone through like the 5 waves. After 5 waves, it will start with ABC. ABC itself has its own rules. Okay, there's 50 plus variations. Don't quote me, okay? I don't know if it's 50 plus. From what I remember, there's 50 plus variation for corrective waves, okay? There's 50 plus variation for corrective waves. The most common variation that happens all the time is ABC. Okay, there's other patterns also. There's ABC, ABC, ABC. There's also like A, WXY, whatever it is. Okay, the most common one that comes up is ABC. But for corrective wave, confirm like plus chop. Okay, confirm it is 1, 2, 3, 4, 5. 5 sub waves within one wave. 1, 3, and 5 only have 5 subwaves. ABC is the common one, but it is not the only one. Okay, so wave A is usually 161.8% or 100% or 61.8% or 50%. Yep, it goes down of wave 5. So you take wave 5, the length of wave 5. ABC can be anywhere within these numbers. That's why I don't trade ABC. It's too many options. I want to trade easy stuff. Okay. Wave B is 50% and 61.8% of wave A. Okay, so how much movement wave A made, half of it, or 61.8% of it, will be the wave B's length. And wave C is usually 100%. Oh, yes, actually wave C is usually 1-to-1 of wave A. Okay, this is the most common one that I found. I used to trade corrective waves. Okay, when I did trade the corrective waves, I found that wave C is the same length as wave A most of the time. Hi Georgie. Hi. Okay, if not, it is 161.8% of wave A, or it is 161.8 of wave B. Okay, so there's so many variations of what could happen with A, B, and C. Even A, B, and C alone, there's so many variations. I don't want to know what the other variations are doing. Okay, so Fibonacci retracement. These are some of the levels that you will look at. Fibonacci is so easy. It basically means, it's basically a retracement. It's basically like it's like simple math. Okay, so if this is $10 and this is, sorry, I don't know why I like to use 10. Okay, $20. This is $10. Price moved from here to here. It moved $10, right? In total, it moved $10. If it moved 14.6%, it means it moved 14.6%. It means you take the difference, $10 minus $1.46. Okay, it's literally like you can just use a calculator. Sorry, I plugged this out of Google, so different people have different levels they look at. Here at Everest, you are right. Thank you, Fabio. Here at Everest, we only look at 88.6 because we find from our own back testing that 88.6 is a more common level than 85.4, and 76.4 is the level that we think is more common, is 78.6. Okay, thanks for highlighting. Yep. If you go, the thing is, if you go to different websites, they will all have like different levels and different like things that they say are the rules. But the thing is, it's based on back testing, right? So here at Everest, we are a research firm. We spend a lot of time back testing and like seeing what is the most common number that hits, and these are the numbers rather than 76.4. 76.4 is like a number like a lot of people use, but I really rarely I really see it hitting 78.6 more times than 76.4. So let's just use these two numbers instead. Oh no. Okay. Okay, so 23.6, if it retraced 23.6, then it just basically means that it moved $2.36. Okay, so 50 is the halfway mark. 50 is the halfway mark, means that it's $15. Okay, it's basically just simple mathematics for Fibonacci retracement. Okay, this is what Fibonacci retracement will look like. From you take the swing high and the swing low, and then you come out all your levels. So 23.6 will be somewhere here, 36 will be somewhere here, your 50% will be somewhere here, 50% meaning it's in the middle, will be somewhere here. Okay, then 61.8 will be somewhere here, 78.6, and then 88.6 will be somewhere here. Okay, but Fibonacci retracement can never pass the starting point. It can never go beyond 100. Fibonacci retracement is only 0 to 100. If it passes 100, that's not a Fibonacci retracement anymore. That is called a Fibonacci extension. Okay, if you're someone who don't really like remembering names or like terms or whatever, just remember, if you are joining our webinars or anyone's webinar, or you're watching any video, just remember when they say retracement, it is the level below 100. Okay, if they say extension, it is a level above 100. Projection is 3 levels. Okay, that one is totally different. And then expansion is yeah, that's something else. You take here and here. Okay, we're not going to look into that today. Okay, let's look at Fibonacci projection. Okay, because you will also sometimes need Fibonacci projection to get your levels in Elliot wave. But the thing that actually you use more is Fibonacci retracement and extension. I think a lot of times you use extension. Projection, you use projection in wave 5. Yeah, you use projection in wave 5. But other than that, I don't think any other waves you use it. Yep. Okay, so projection, you take 3 points. You take the swing high. Okay, so let's say this is $10, this is $20, and this is $18. Okay, so from the swing high, it pulls back, you take this other point, it continues to do another zigzag movement, you take that point, and then you will get the projected level here. Okay, the projected level here. Everyone good? Everyone, it's simple enough? Projection, good question, sorry. Projection is usually 61.8 okay to 100%. Okay, we also look at like 127.2. Some cases we use 161.8. Okay, in Elliot wave, if I'm using Fibonacci projection on a normal day, right, not combining with Elliot wave, usually it doesn't reach 161.8. But if you are using Elliot wave, 161.8 is a very common level in Elliot wave. Okay, so these are the levels that you want to focus on. Very, very extreme and rare cases, Fibonacci projection can reach to 3.238, I think that's the number. It's a very rare This is a very extreme case, like this is an over extension, okay, and over projection. Okay, so that's basically what we were supposed to cover today. I'm gonna quickly go into trading view so I can show you guys what Elliott wave would look like. Okay, give me a moment. I wasn't planning to go on TradingView today, but a lot of your questions do require me to go on TradingView. Like before point X, what does the chart looks like? Okay, so I'll show you what Elliott wave would look like, then maybe it will help to answer the question. Okay, can you guys see my screen? I'm on TradingView. Okay, thanks, Desiree. Okay, this is URUSD. I've never done it. Elliott wave is so time consuming that I've only ever done it on one chart, and that chart alone was good enough to make me money. Oh, sorry, I've done it 2 charts, Elliott wave and Ethereum. Sorry, XAU, USD, and Ethereum. Okay, so let's go on the weekly to show you what it will look like. We go to the starting point of where gold ever even started. Okay, if I am looking at this, right? I'm looking at this. This is what my projection of Elliott wave would look like on gold. Okay, this is how. Oh, thank you. This is how much backwards you need to go. You need to start charting on the weekly. Okay, so Elliott wave 1, 2, 3, 4, 5. There is so many. You can see A, B, C, D, or whatever other patterns. That is for your impulse wave or Elliott triangle, A, B, C, D, W, X, Y. These are for your corrective wave. Impulse wave, you only use Elliott impulse wave. That's why don't trade wave 2 and wave 4. That, look at it, even just on TradingView, there's so many options for you to choose from. Okay, so my take on what I think Elliott wave looks like on gold is this is wave 1, this is wave 2. I might be wrong, okay, because my actual chart, wave 3, wave 4, and wave 5. Okay, this is wrong already. See, when you're doing Elliott wave, you think you got the correct wave, and it's wrong. Why is this wrong? I'm gonna give you the answers. We only have 5 minutes. Sorry. Okay, remember the three golden rules. Wave 2 cannot pass wave 1. Okay, that is satisfied. Wave 4 cannot pass or go near the region of wave 1. So wave 4 right now is at 1064. Wave 1 is at 1037. It kind of is in a region. So I think I can't remember what my charting was. Could have been something like this instead. Okay. Okay, anyways, right now we're in wave 5. Okay, wave 5, and then I think I could be wrong, okay? We're now in A. It's gonna do B, then C. No D and E, sorry, just A, B, C. Okay. A, B, and C. If I am wrong, that means wave 5 is not completed. Wave 5 is somewhere here. Okay, I don't think wave 5 is completed, to be honest. Okay, but then if wave 5 is completed, you need to remember one of the golden rules is that wave 3 cannot be the shortest wave. Okay, so if we are measuring wave 3 is 600. Okay, wave 1 is 77. Okay, right now wave 3 is longer than wave 1. It looks like wave 1 is longer because it's wider. you mentioned that wave 1 is usually wave 5. Yeah, usually, but not all the time. Okay, so let's measure wave 1. Let's take this. Hey, where's my ruler? Okay, let's find something else to measure it. Okay, I'm gonna take the bottom of here, draw it to the top, take the same arrow. Okay, based on one of the ways to measure wave 5, by right, wave 5 ended here, right? Okay, but this is only if my wave count is even correct. Maybe my wave count is wrong. Maybe right now we're only in wave, maybe this is 1, 2, we're doing 3 now, 4 and 5. Okay, but from sorry, because I haven't used Elliot wave in my own charting for a long time, so I cannot really remember how I charted it the last time. But from what I remember, we should be in wave 5 of gold on the weekly chart. Okay, but to confirm it, 2, 3, 4, 5, then ABC. If I'm not mistaken, it should be complete. Okay, so how do you confirm? Once you find your 5 waves, and then you're like, there's so many waves, I could have drawn these 5 waves, right? There's so many waves. You can see, like, I could have drawn it this way, I could have drawn it this way. This is 1, 2, 3 may not have ended. We're still in wave 4, 5. Okay, maybe on the weekly time frame, we've never even ended a 5 waves pattern yet. Okay, or the other way is maybe this is wave 1, 2, 3, 3, 4, 5. Okay, this basically my point is there's so many ways to draw 5 waves. How do I know which wave is the correct? That's when you go down to the lower time frame. How do I move this back? You go to the lower time frame. I have to redraw because I can't move it back. You pull out all your rules and you go to your lower time frame to confirm the subwaves. On TV indicator called Elliot wave, absolute is plotting as you expect. Okay, yeah. Actually, I did, after I plotted these 5 waves, I did go and research to see how other traders plotted their 5 waves, because more people agree that this is the 5 waves, it's more likely that this is the correct 5 waves. So once you get the correct 5 waves, you kind of already know where price is going. You know, with Elliot wave, you can predict how far it's going, because after 5 waves, you know it's going to be ABC, right? After ABC, you know it's going to be 5 waves again. Okay, so with Elliot waves, you kind of already know. With RSI and then go down and find the other waves. I think with indicators, it's a bit hard to look for the 5 waves. More for Fibonacci. With Fibonacci, you can use the 5 waves. Okay, so I'll show you what I mean. So now you already found your 5 waves, right? Remember just now, even I need to refer. This is why I say don't try to remember the rules. Just refer. I need to refer back to my own PowerPoint slides because I can't even remember. It's not like I can't remember, but I myself will refer. Okay, so remember we said wave 2 is usually 50% of wave 1. So now you take your Fibonacci. Okay, 50%. Okay, usually, just give me a sec. I don't mind going over time if you guys are okay to stay. For those who want to stay, you can stay. Okay, wave 2 is usually 50% of wave 1, but actually wave 38.2 would have already satisfied wave 2. Okay, if you guys remember, sorry, it's not the rules I said just now, but usually it will come here 50% and then continue, it would have satisfied. Because remember, all the numbers I gave you guys just now were just a guideline. Okay, it's not like the golden rules. How do you determine the starting point of a smaller time frame? Okay, give me a while. So once you have identified on the bigger time frame and you are confident that this is the correct wave count, when you go down to the smaller time frame, you will not have a problem. Okay, so remember I said within wave 1, 3, and 5, there is 5 waves. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, and then wave 5 will have 1, 2, 3, 4, 5. Okay, so how do I know where the starting point for the waves will be? Okay, I now go down to the daily time frame. I go down to what I drew. I have to zoom out. Unfortunately, this is how it works. Okay, I know the starting point for wave 4 is here, because on the weekly, I already established the starting point is here. I know if this is the end of wave 5, I know the starting point for ABC will be here. ABC will be here. Okay, and to confirm that these are correct, that's why I say it's very time consuming, because now that you already spot your possible 5 ways, you now need to pull out your rules. Okay, let me show you guys the rules that I was talking about just now. Okay, these are the rules. Remember these rules. I wonder if I can copy this onto TradingView. No. Okay. You now pull out the rules that we were talking about just now to double confirm if it hits. If it hits, that means it's correct. You are on the correct wave count. Okay, so now you've identified. So wave 3 is usually 161.8 of wave 1. How do I count 161.8 of wave 1? Take a Fibonacci projection. 1, 2, 3. I pull out the 161.8. Do you see how wave 3 came to 161.8 and then it reversed? Okay, it didn't touch. It could be because I'm just eyeballing this. Okay, it could be that I never marked it properly, but Elliot wave is not perfect. Okay, these are basically the guidelines. Basically, the idea is once it ends, it will pull back to 50%. It didn't exactly touch the 50%, but it came close and then it turned back. It came to 161.8. It didn't like touch per se, but it came close and then now it turned back. Okay, so if we're using the next rule, which is wave 4 is 38.2% to 61.8% of wave 3. Okay, sometimes can go longer. We now take the Fibonacci retracement of wave 2 to wave 3 and see if it hits 61.8. 78.6. Okay, in that case it didn't hit 78.6. You can see wave 4 came to this area, which is exactly what the guideline said it would come to, and then it continued with wave 5. Okay, so with Elliot wave, you can really kind of like pinpoint very accurate entry areas, because if you are following the rules, which are this, the guideline, these rules here, this picture here, I'm going to make this bigger. If you're using these rules, you know that, okay, price is doing a wave 2 right now at 50%, most likely it's going to stop and reverse. That's where you put your entry, or at 61.8%. Okay, then you put your entry there. Okay, so then this is what your possible 5 waves look like. Okay, to confirm your 5 waves, after you have like confirmed with all the rules, all the 3 golden rules, that wave 3 needs to be not the shortest, wave 4 cannot pass wave 1, what was the last rule again? Wave 2 cannot be longer than wave 1. Rule 1 is satisfied, rule 3 kind of questionable. It almost passed, honestly. It really came close, but it didn't. Okay, so I guess it's satisfied. Okay, then now you go down to the smaller time frame. Within your smaller time frame, to confirm if you drew the correct wave, you should be able to draw 5 waves within your waves. So just eyeballing, I see 1, 2, maybe 3 here, or maybe 3 is here, and then 4 and 5. And then using the exact same rules again, okay, using the exact same rules again, this exact same rules again, you can determine whether your wave count is correct. So remember, wave 2 is usually 50% or 61.8% of wave 1. So in this case, you can see price came to wave 1, came to 61.8%, and then it reverses. Then wave 3, wave 4, wave 5. Okay, so that is how you use Fibonacci with Elliot wave, combining Fibonacci with Elliot wave. It is time consuming, but if you manage to satisfy all the rules and the guidelines, you have found your correct wave, you can kind of predict where price is going. If this is truly, I mean, think about it, right? If this is truly a 5-wave count, if this 5 wave that I drew here is correct, we know for sure that price is doing an ABC right now. That means we know for sure that gold is doing an ABC right now. Okay, not ABC, it could be any variation. It's doing a retracement right now. Okay, so our job right now is to wait for price to complete the ABC, or rather the wave 2, meet the minimum threshold, and then there we can get ready to enter for a buy, because then it'll do another 5 waves up. Okay, I hope that wasn't confusing. It took me quite a while to understand Elliot wave, so for those who are just learning it for the first time today, it's okay if you're confused. Okay, you need another 5 wave. So if my 5 wave count is correct, to be honest, right, gold should pull back, okay, based on the rules of Elliot wave. Based on the rules of Elliot wave, wave 2 needs to pull back 50%, not needs to, like usually pulls back 50% to 61.8%, right? It usually pulls back that level. Based on, I'm gonna erase everything because it's too confusing already. Okay, based on, if this is truly a wave 1, 2, 3, 4, 5, okay, we go on the monthly chart, this will be a wave 1. If we go on the monthly chart, this 5 waves is actually a wave 1, 2, 3, 4, 5. Okay, based on the rules of Elliot wave, on the minimal, wave 2 should pull 50%, or on the usual, wave 2 pulls 50% of wave 1. We should see a retracement of gold coming to this area. Okay, we should see gold coming to this area, and then after that continue with wave 3. Okay, so if this is the peak of gold, which is 2080, we can expect quite a retracement and then a continuation based on Elliot wave. Okay, based on Elliot wave. If price continues to go up, you know what this means? This could take decades. This will take decades because we are on the weekly time frame. We are on the weekly time frame. If you apply the exact same rules to the 4 hours and the daily, you'll be able to find more entries. You'll be able to find a lot of entries. Oh, actually, I really don't think I did 4 hours and 1 hour. Maybe I did 1 hour and 15 minutes, because I remember I was like just getting into trades after trades after trades, and I got like 9 correct. That time I was playing pullbacks as well, so I was playing the corrections as well. So after I enter for a sell, I will take profit, enter for a buy, and then I'll be correct. I'll take profit, enter for a sell, and I got like 9 corrects. Why? Because if we're following these rules here, you already know where price is going to reverse. You already know where your entries are. You already know where your take profits are. So apply the same rule to a smaller time frame so that you can get more entries. Okay. Yes, on the weekly time frame, this is going to take decades. It's probably going to take centuries. By the time, if my wave count is correct, by the time price reaches wave 3 of this big wave, I don't even know if we're still alive or not, to be honest, right? Okay, maybe not. Okay, we'll probably still be alive. I'll probably be in my 80s or something. Okay, so this is because we are on the weekly time frame. Apply the same rules to the smaller time frame, and you'll be able to get more entries. Okay, that's it for Elliot wave and Fibonacci. I hope you guys learned something. If you have the time, do use Elliot wave because it is a very accurate tool. But you, of course, you saw how time consuming it can be, because you then, after you spot your 5 waves, you then need to pull out the rules and see if it's correct. You know, you can spot 5 rules. Sometimes you like, okay, my second wave is correct, my third wave is correct, oh, my fourth wave is wrong. You immediately need to recount the entire thing. So that's why it's very time consuming. But once you really spot the correct 5 wave, right, I can promise you, you're going to make a lot of profit. Okay, thank you so much. Okay, thank you so much, Desiree. Thank you, Jody. Thank you, Fabio. Thank you, BL. Congratulations on pregnancy. Thank you so much. My pregnancy brain is so bad. Like, I feel like my brain is not connecting. My sentences are not connecting very well. I'll catch you guys again. Okay, let me see when I'm taking you guys. I'll be taking you guys for the next few months, by the way. Let me just check my schedule. Okay, webinar schedule. Today is the 7th, right? The next time, okay, I'm doing Bahasa tomorrow. For those who don't understand Bahasa, you don't have to join, obviously. The next time I'm taking you guys is on the 14th, which is next week. Okay, so I'm gonna teach, it says here topical. I can't remember what topic it is, but I will see you guys on the 14th, okay? Okay, so bye guys. Take care, everyone. Bye. I hope you learned something. Okay, bye.